Yes, the VA's come out and said with a new VA Circular 26-24-17 titled Secondary Borrowing Requirements on Assumption Transactions. So now it's official. Now, listen, guys, this is the thing. This has actually been the case for a long time, but many people thought it wasn't allowed because of how secondary borrowing is defined in the VA handbook. And I'm going to drop these links down below as well. Basically, the section says the veteran is not placed in a substantially worse position than if the entire amount borrowed was guaranteed by the VA home loan. Essentially, you would need to get a second mortgage at the same or better terms of a first mortgage. Now, guess what? I don't think that's happening anytime soon. Remember, this is an assumption of a first mortgage. If you're watching this video, I assume you're trying to assume a VA home loan. I'm going to break down how it works and the many factors that go into this process, plus something the VA completely missed with this circular that would have been a game changer for second mortgages. Now, for people that don't know what a VA Assumable Loan is, I'm kind of going to give you a brief snippet of it. It's where someone can assume the current terms and conditions of a VA home loan. Now, in a good example of this, and now this is for educational purposes only, because we need to have something that we can talk about, is let's say back in a couple years ago, you got a 2.25% interest rate and you have 310 remaining months left on your mortgage. So for example, if you're selling a property and you're a veteran, you have a 2.25% or 310 months remaining, I, as a veteran that has my full entitlement, can go and actually make an offer on your property for whatever that mortgage balance is. Let's just say, example, $300,000. I could assume that $300,000 mortgage, the 2.25% interest rate, and the 310 remaining months, and put my benefits onto that property, and essentially freeing up your benefits to be able to use the VA home loan again. Now, the challenge has always been is where do you get that secondary financing to cover that gap, which we're going to talk about here. Another piece of this is that you don't need to be a veteran in order to assume a VA home loan. A lot of people don't realize that you can do that. Furthermore, you can assume a VA loan as a primary residence, a second home, or as an investment property. Now, how the actual assumption works through that process is different in this case by case. I'm gonna give you guys just a couple quick examples. If you are a veteran and you are purchasing the property as a primary residence and doing a substitution of entitlement, remember swapping out benefits, that's pretty straightforward. You can be a veteran and assume a loan as a second home or investment property, but that will lock the seller's benefits into that property. So whatever portion they have locked in will be locked into that. Same thing goes for non-veterans, right? So they can buy as a assume as a primary, second, or investment property, but that will lock in the seller's benefits to that property. So now let's go over what the VA circular basically says. First thing they talk about is the lien position. A second mortgage must be subordinate to the VA loan. The VA loan must be in first lien. And they also put this guidance out, just because there's so much confusion around can you get second mortgage or can you now. The other part they talked about is the documentation that is necessary when securing a second mortgage with on top of a first one, which is going to include making sure that all the secondary lender information is there, the loan amount, and the repayment terms. This is also going to require some type of subordination agreement that needs to be signed at closing. And also, you're going to have to work closely with the second mortgage holder and the first mortgage holder to provide them all the information that both parties need. Now, typically, you would have a loan officer that would do that on your behalf. But in this case, as the buyer, you're typically the one that's going to be coordinating all the communication. And if you guys want more videos on how to do that, happy to provide that information because it can be confusing. Now, let's talk about the third part, which is allowable uses of the second mortgage. So proceeds from the second mortgage can be used for allowable closing costs and any money that's due to the seller at the time of closing as part of the assumption transaction. So example, you're selling a place for $500, assumption is $400, you need a $100,000 second mortgage. that second mortgage can be used to cover the gap between the assumption and the purchase price. So keep that in mind. The other part is going to be underwriting and interest rates. Now, this is something that it's going to vary based on the type of mortgage, but essentially a second mortgage monthly payment is factored into the overall debt evaluation. Now, important to note, this goes both ways, right? It's somewhat, this is the thing. VA loans very loose. Second mortgages, they're a lot tighter. It's like almost getting a conventional loan, but there's no conventional. Second mortgages, they're all mostly portfolio seconds. So keep that in mind, is that you may be able to qualify for an assumption with a second mortgage, but you may not necessarily qualify for a second mortgage with an assumption, because they look at the different factors for income can be different. Student loans will be looked at different based on who it is. And it also makes a difference if you're getting a fixed second mortgage or an adjustable rate second mortgage, because normally in an adjustable rate mortgage, they're going to count a couple percentage points over what they're giving you, and they're going to fully amortize it. This is more technical. I know I could talk about this for hours, but just these are things that you need to keep in mind. And the other thing that they clarified is that a second mortgage can exceed the VA loans rate. This is a big deal because, again, a lot of people don't realize you can do this. Now, this is another big part of the assumability of a second mortgage. The second mortgage does not need to be assumable, but keep in mind that this affects your ability for someone else to assume the mortgage that you just assumed because of the second non-assumable second mortgage. Essentially, you just have to pay it off if you want to go this route. Now, another thing to note is that the VA has unlimited assumptions, okay? Now, at some point, it's going to not make a difference, or it won't be a factor because the balance might be too small and the purchase price might be too high. But this is something that you can do, is that you can have kids or relatives assume your current VA home loan. It's another great way that you're able to kind of finagle with this. Now let's talk about the grace periods and foreclosure protections. Now, and most second mortgages, they're pretty standardized. Same thing goes with like this foreclosure process. Basically, the VA just wanted to clarify for second mortgage companies that they have to give reasonable grace period for late charges and foreclosure proceedings. Now, what did the VA miss? I think this is by far pretty big, because it has to do with the appraisal process. Now, there's a couple of key things you guys need to understand with appraisals and VA assumptions. So on a VA assumption itself, it does not require an appraisal or termite inspection as you would when you originally purchased the property. Now, typically a second mortgage is going to require an appraisal. So let's talk about how a servicer looks at a second mortgage, because it is right now varies vastly across servicers. We know this because we talk with a lot of people that are going through this process themselves, right? So some don't take second mortgages at all. Now, this is where it gets complicated on the ones that do allow for them. Some of them will allow you to go up to the purchase price. So for example, if you have a balance of $400,000, purchase price of $500,000, they'll let you go up to the $500,000 if you can find a second mortgage servicer that will allow that, okay? The other one, this is more technical, will only allow you to get a second mortgage up to the original notice of value, NOV. It's important to know how they look at it, because in that same example, let's say they originally purchased the property for $420,000. Mortgage balance is $400,000. Sale price is $500,000. So essentially what this means is, even if you can get a $100,000 second mortgage because the second mortgage company allows for it, it would still mean that you could only get a second mortgage for $20,000, which is the original notice of value. The reason why they do that is because you're assuming a first mortgage, but getting a new mortgage on a second. So that's kind of the theory behind it. I'm hoping that the VA does come out with some better guidance on what can and can't be done with this, because there's still a lot of confusion and the wait times are still ridiculously long. We've definitely seen them get better and better over time. So if you guys have any more general questions or specific questions about doing assumptions, drop a comment down below. And we'll keep you guys posted as we go throughout this journey of VA assumable mortgages in the marketplace today. Have a good one.